Good morning, everybody. Hey, how's it going? Good morning, good morning. Goose looks like he's doing a touch and go. Philip, Infinity, Sergio, Donald, Peter, Tara, Craig, John, Dave, Ed, Nikki. Good morning, everybody. Gary, Darren, Francois, Al, Michael, Larry, Indy, Alan, Ted, Rongamer, Svenborn, Wade, Mary. Glad to see everybody. I really am. David, Robert, Maurizio, Jan, Mark, Rex, Carlene, Devin, Steve, Alan, Merle. Good morning, everybody. If you want to chat with me like all these great people saying, hey, good morning, all you got to do, be a subscriber on the channel. And if you're having some kind of problem, try a different browser, try a different, I don't know. All it is, I have a checkbox that says require subscribers. That's it. There's no other, like, I can't ban people. I can't, anything like that. So make sure that you subscribe and you're watching live. First you got to subscribe, then you got to watch live, and then you got to use a browser that works if you want to chat. So I had a few people telling me that, JT, give me permission to be on the live stream. I don't know. Anyway, while I'm live, you can chat. While I'm not live, if after about 10 o'clock in the morning Eastern time, I'm no longer live. You're gonna have to leave a comment down below. And this whole thing, CRE, Morgan Stanley putting out this report. I got a little piece of it here. Let's see, flip it over and show it. Here we go. And let me roll back up to the top. So this thing, commercial real estate, I've talked about it, how through the end of next year, look at this. This is Morgan Stanley's report. We estimate $2 trillion of CRE debt matures by the end of 2025 and will need to be refinanced or paid off some way somehow. That's pretty crazy. Now the top 25 banks out there have 30% exposure, and the rest of the 4,500 smaller regional banks have the remaining 70%. And what do you think we've been seeing here? Those smaller banks been having a little bit of problems. This kind of piles higher and deeper on the treasury borrowing in a leveraged way we were talking about before. Just check another, put another box in the check for potential problems cooking as we get closer and closer to whatever big problem we're going to have. And, Unusual Whales on X was pointing out this morning, we usually see a 20% decline in the stock market when we get rate cuts. And, all these arguments, well, we only cut rates when there's a problem, blah, blah, blah. Yeah, rate cuts aren't bullish. I've been saying that. And if you're new here, please let me know. I'd love to welcome you being new. But rate cuts aren't bullish. I hate to break the mainstream media narrative, but it's freaking scary is what it is if we actually start cutting rates. That means that things aren't as bullish and strong as they were. Anyway, it's pretty crazy when you look at it. I mean, CRE loans by regionals tend to be smaller loans, 5 to 7 million, with a maturity around 5 years. That's going to have to be refinanced. What changed between 5, 10 years ago? Typically a 10-year loan. What happened between 10 years ago and now? Well, if we pop over to our DGS2 chart, we fly back 10 years ago. Dun, 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 dun. Look at that. We were in 0.5% and 1% interest right there. Maybe they charged them 3%. Make a little jingle off of the loan. Right? If you refinance now, holy beep, you're going to be paying like 7-8% maybe. At least 5, if not 6. That's a big difference between borrowing down here and look, the mortgage rates kind of go right along with that. And commercial mortgage rates, a little bit different, but very similar. So it would have been originated around 2014. And how much did they get paid off? How much are they going to have to refinance? A lot of these people just keep the financing going. Just keep the interest paid off. And it's kind of crazy when I look at we actually when they're building commercial properties and stuff like that, we occasionally get contracted to by the bank, but we're paid by the project owner to evaluate draws, and a lot of times they roll the interest right into the loans. It's wicked, and they expect to pay it all off when they sell it out. Anyway, so this, the other problem here. Look, this is open table orders and TSA. We're back to 97% COVID, pre-COVID. These pre-COVID levels. COVID dropped us out to almost zero. 97, 94%, and office space occupancy 57%. Hey, there's the boss. Good morning, Kimberly, my lovely wife. Glad to see you. Glad to see you. Anyway, this the problem is cooking here, and this is one goose too. The REIT equity analyst here. If you got CRE exposure, could see a 30% decline. This is the kind of stuff. This is kind of news I keep track of. Not the mainstream media narrative. So if you want to know more about stuff like this, make sure you subscribe down below. Make sure you hit the bell with the notifications so you know when I go live. I dig this stuff up. Try to come up with something new every day to kind of share with you. I mean, this is and this is put out by Morgan Stanley. This wasn't like Joe Blow on Seeking Alpha or something like that. This was a Morgan Stanley trader report, and yeah, wow. Anyway, another big week of earnings. I just realized I did not drop this in Discord. I did to myself, but I didn't put it out there where everybody else could see it. Airbnb coming up this week. Shopify, Monday.com already hitting this morning. Trimble. We have an older Trimble instrument for surveying in the engineering company. ANET, Arista, Waste Management. That's an industry that just prints money. Yeah, interesting week. Barrick, gold reporting. That's Barrick Mining. Their ticker, very confusing. Grabbing gold since there's like 900 gold tickers. CME, market maker, or market operator. Crocs, John Deere, DraftKings. Kind of moving into the period where there's less sports betting. If I had to kind of put it one way or another. Coinbase, Roku, Arbor, Air Canada. It's a interesting week. We did, most of the bigger ones have already reported. Most of our bigger Magnificent 7 or Magnificent AI 5, whatever you want to call them these days. Twilio, right there. It's an interesting mix coming up this week, and we'll see what happens. Quite a few of these were showing up on the market roadmap list for the week, which, if you want the market roadmap list for the week, links in the description. Just click the more button down below the video right down there, and it's like $5. There's Zilla Group. There's ZG right there. Wronger. I've got one contract short on that one for about $100. It was up like 50% on Friday. 50%. Anyway. All right. So more earnings, more. Anyway, let's jump into I guess the disclaimer before we talk about some trading. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. That means I may never predict another one right again. All right, just because I got it right in the past doesn't mean I'll get it right in the future. But odds are I'm not gonna get it that wrong. Been nailing some pretty good ones lately. This presentation here intended to be informational, educational, fun, and entertaining. It's not a recommendation to buy or sell anything at all. Don't buy products from gurus. Don't buy reports. Don't buy all that crap you see. You don't need it. All right. Don't join groups. You don't necessarily need it. But, if you trust the people and you want to go deeper, you build that relationship, then, you can choose to support them, but make sure you trust them first. All right. Don't just fall for a sales gimmicky thing. All right. And if you desire personal financial advice, hire and consult a financial advisor, and back to the financial instruments. Don't buy stocks, don't buy options, don't buy Forex, don't buy cryptos, don't buy futures, don't buy bonds, don't long them, don't short them, don't trade them. There's a substantial risk of loss. Now, we have this week coming up. We've got CPI, we've got PPI. It's going to be a wild ride, more than likely, this week. The Fed speakers last week didn't really have much cooking. This week we have CPI coming out tomorrow morning hot. So be careful, all right? Come in tomorrow and you're like, JT, what's all the volatility? It's that CPI print. And it's interesting, right? CPI has been running a little hot. And they've been adjusting. Seems like they've been adjusting that so that the rate cut narrative kind of stays in check. I think they need... look at the market. The market thinks the rates kind of need to stay up here. We don't need a big cut. We could cut to here, maybe even to here, but the orange line is the Fed funds rate. That's the FOMC rate. All right. The DGS2 is the actual market rate, and that's 2-year constant maturity rate. The Fed always chases that rate. They chase it up, they chase it down, they chase it up, they'll probably chase it back down. It's already eased off. Why did they start holding? They got above it back here in February last year, a year ago. They just they kept raising even though we were getting divergence. That was kind of dumb, actually. They probably should have held steady right in this target, probably at 4.75. Probably should have held steady there, but they cranked it on up to 5.25. 5.25 to 5.5 target rates, and just been holding. We've been holding. And I don't know. The market rate's actually below. That's why mortgages have come down. And mortgages did peak out back there in the fall. They're down. But if we see this DGS2 start ramping up, break back above the Fed, they're going to raise rates more. Totally buck the narrative and may freak everybody out. So I think they're just talking it up that we're going to cut rates so the stock market stays up. But the reality is, it's not looking too bueno. Anyway. Yeah, Darren, that's the whole beginning thing there. So, and be careful reading Seeking Alpha reports. I have to say, just go to the source. Just go to the source. You don't need somebody else's analysis of the... you can come listen to my analysis, but I'm just going to bring you the data of the report. I'm not going to do my own analysis on somebody else's analysis. Anyway. Yeah, that was a big Morgan Stanley report. So, and it's China too, not just Canada and Japan. So it's widespread. And it was in that report I was showing you. Anyway, moving on. What we got cooking for today? Look at this. This keeps declining while this keeps rocking higher. And look at this. This is crazy too. I gotta find my indicator. We're gonna adjust that indicator. Oop. Give me a second. We're going to uncomment a few lines. Mod. Let's go check that one out. Let's go see what's cooking. Yeah, nice. That trade should close out on me if I didn't close it out already. I was shooting for that 74, 75 area. It's like multiple fibs on there. Yeah. Back to S&P. Look at this. And, oh, I need to change one more thing in the code. We need a 13. Save. Update on chart. We got 14 weeks now. 14 weeks. This will be 15. What's this doing? Look, out of the last 15, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 green candles out of the last 15. And this will be number 15 when we get it. Crazy. Look at that. Look how far back we have to go to find this again. This didn't happen, didn't happen, didn't happen. Where's the next time it flagged? Right there. Flagged in the 50s, 60s, 50s and 60s. Isn't that crazy? Isn't that crazy? The last time we had this many up weeks, kind of in a row. So we haven't done that in like 60 years. Just straight nuts. Just straight nuts. I'd be very cautious. This is an unusual time in the market is basically what that means. Unusual. Anyway. They're a short CRE ticker. You're gonna like there's not CRE is kind of weird. I'll show you. This one right here has been one of my favorites. I shorted this one back here a year ago, for those of you that remember. And that worked out right there. And now we've done another roadmap blind bounce. This is just a real estate investment. REIT for commercial real estate. It's a big one. And could go down in a blaze of glory. But yeah, the other way to play is just to play good old KRE if you think that the regional banks are going to have trouble with this whole thing. Although what we have now is a potential roadmap line bounce going higher. So I would definitely be careful. You want to be buying your puts up here, not buying your puts on a potential bounce if you're trying to play short. I mean, and 48 doesn't have a long way to go to zero, really, compared to when it was up here at 76. So, I don't know. If we get another big bank blowout situation, like, I mean, this one, look at that. I mean, that didn't even show up that much in KRE, but that went from 14 to 5. How much money could you have made? I don't know. If you were on top of it right here, it has a 50% loss or 50% drop. You could have been on, but I don't know. Different ways to play, and it's like FAS. That's your big banks, and you can see they're starting to be kind of strong. So KRE, smaller ones. And there's plenty of other tickers like KRE out there. Already. Moving on, moving on. Now, also interesting. Look at that. We're punching up here, but this is stocks above the 50-day moving average for the S&P 500, right? Why is this hanging out down here when this is up here? That's some wicked divergence, and we don't usually see that. We don't usually see this kind of divergence, all right? If this thing flushes on down and this thing stays up here, we're setting up for an epic crash, all right? The last time S&P 500 had this setup was 1987 in October, just before Black Monday. Are we going to have Black Valentine's Day in 2024? We're going to have Black Tuesday when the CPI print comes out. I don't know. This is an OPEX week. We have the monthly OPEX. We have the CPI. We got the PPI coming out. And just throwing caution to the wind, everybody. Be careful out there. Just saying. Be careful. All right. Stock's about 20 days, just kind of chopping. We may see this pull up just a little bit more and then roll over again. This one tends to chop a lot more than the stock's about the 50-day. Yes, and that's also interesting, though, that this is hanging out down here while the S&P just keeps grinding on out. You can say, oh, it's all the AI 5. You know, what's crazy is NVIDIA added the value of Tesla just in the last couple of days, or in the last couple of weeks. They added one Tesla to their market cap. Think about that for a minute. Does that even make sense? How many people here own anything with an NVIDIA logo on it? You can let me know in the chat. I mean, maybe your GPU, maybe. If you even have one. A lot of times, if you just have a bargain basement computer, you just have an Intel chipset, or an AMD chipset that has graphics on board. So, yeah, I own plenty of stuff with, NVIDIA logos, but your average person doesn't. So, does it make sense that they have a nearly $2 trillion market cap, that they're almost worth more than Amazon? Does it make sense? I mean, look at this. A 38 price to sales. Anything over 20 is ridiculous. These guys historically run about 20. They're sitting at 40, probably even higher. Just be careful. Just be careful. Look at that. Added a Tesla to their market cap. Wicked. Anyway, I digress. ES not really being enthusiastic here. We may kind of chop around and push on higher. 5150. Now, somebody pointed out to me on Friday. Look at this. Look at this. Right there. That was October, right? That was the low. Look at this number right here. I didn't even click on the top. Over 900 points. Straight up. 22%. Straight up. Without getting a pullback. I mean, it's right there on S&P. Just clear a bunch of stuff off of here. This is wicked. All right. Crazy, crazy numbers. I gotta zoom up, zoom up, zoom up. Need to get rid of a bunch of crap off here. 900, over 900 points. We had 920 points. And we didn't get, I mean, we chopped right there, but not even a 236 pullback at any point. That's like the minimum little pullback. Like, I don't even keep that turned on because it's such a baby pullback and unreliable as far as support goes. But we didn't even, I do hold it right there. We didn't get any 236 pullback anywhere in there. That's, I mean, unusual. Like, be careful chasing this long. I cannot warn everybody enough. NQ, likely to top on out 18.4. Yes, 5150. That's S&P 500. That's QQQ. Russell. Interestingly enough, that one shooting on up. Let's clear this off just a little bit. We keep my target there. Pushing up into the deeper into the zone. We could come up to the 786 level. We're doing a 3-wave move up, it looks like. And we're getting right to it. It's between 2035 and 2065 is where I would expect this to stop, which is right at that 76 level right there. Right in that zone. I don't expect us to break out higher, although we could. If we do, probably shooting on up to probably right up here at 2150. And this is the IWM, if you're unfamiliar. So what I'm talking about right here is possibly 209. We're looking at a move up like this. Like JT, how do I trade it? We're looking at resistance basically right in the zone where we are. And I clicked all that sloppy. Let me adjust that just a hair. So right out there, maybe a lower high, and then we could drop on out. So be cautious if you're chasing it. CO, right up the roadmap again. If we can get above, up here. If we don't, that can be, oh man. Uh-oh. Check this out. I can see it. Potential, it's not perfect, but potential measured bounce down if we break back below. Already got my alert right there. Imagine that. And we're breaking up higher, especially if we get above here. Target's up here. Probably 87 for now. So there you go. It's coin flip zone a little bit. Like I would not long it or short it right here. We need a pullback if we're going higher. We may pull down right in the zone, hold support, and then bust back through. Under the roadmap line sets the tone for going down. This was a 3-wave right up into the roadmap line, so. But this could be a nested setup, so it's very much very not clear, I guess you would say. Very much not clear. GC looks like it's still reaching down to the zone. It's like the weekly gold trade going to take the first loss. Bitcoin targets up here around 52 for now. Back to the top of the channel. Now that we're in there and pretty much held in there all weekend on the this chart right here. Grab the channel, draw the channel right there. So we're probably gonna head right up in this zone right around 52 over the next few days. We do have the halving event coming up out here, and if we break out to a higher level, it's entirely possible that we go shooting off, popping off to a new all-time high. It's entirely possible. We pop an all-time high right into the halving. Then we get some kind of wicked pullback. Volatility. Entirely possible. If we break an all-time high, consider protecting your profits and all the stuff that you got. Ethereum. Ether. They added some spot ETF applications. There's a lot of speculation that'll get approved. This thing's still lagging. Like, look, it's barely got any enthusiasm breaking above that trend line there compared to Bitcoin. If that one gets back down here, back below, say about 2,400, we could easily see that go. I'll just take this one off for now. We could easily see this come right back down here in a 3-wave fashion. And what do you mean, JT? What do you mean 3-wave fashion? It's 1, 2, 3. Look at that. Lines up perfectly right there with that. Sometimes these things work out. It's holding resistance at the 618. That's what I see without even drawing the fibs. See that right there? This is a crucial point. right here. Resistance right there. That's 618 of this drop. That's a measured bounce. That can take us right down here very, very quickly. Be careful. I'm just throwing it out there. Don't be too overly bullish on Ethereum. It's not proven to be bullish at the moment. Maybe better prices available. Dollar is just parked right in this resistance. It's above the roadmap line support, below the resistance for the 618 retrace, just parked in here. This can go sideways for a while. If we break out above this upside resistance, probably going on up. If we break down below all this stuff, we're probably coming down, way on down, possibly low 90s, mid 90s, low 90s. And what's moving today? SMCI continues to be ridiculous. This one may go full retard, may go full stupid and go to 1100. That's the next resistance up at this point. May go full. Is the movie Simple? What was the movie? Simple Jack. Oh gosh, can't remember. That's a line off of a movie. I'm forgetting the movie at the moment. Anyway, 1100. Can it pop there? Sure. If it does, I would go shopping for $800 puts out as far as you can afford them. Probably 26, maybe 27 by the time we get up there. I don't know. And sit on them because this thing is highly likely to come right back down once we finish being ridiculous. And I just traded P-Lab. Oh, just booked my profit on P-Lab. Had a $33 order. I bought it down here on the breakouts. Booked the profit there. Maybe like, JT, looks like it's going higher. Well, I decided 33 was good enough for me. I mean, 34, a little more aggressive. 34.90, super aggressive. I booked the profit. I'm out of the way. However many shares that was. Doesn't say on my alert. So. ANET. Be careful. This one has earnings this week too. Be careful. Keep saying be careful, but I mean be careful. All right. Earnings after the close on ANET. Pop 351, drop 210. I would, after doing this, I mean, based on the way AI related stuff has been just being ridiculous, we may pop. But the chart says that it has a lot of potential to drop. So can't say for sure, can't say for certain, but that's getting to be crazy, and it may go full SCMCI and NVIDIA right there and just go for 360. Entirely possible. SMPS, it's kind of dangerous if you ask me to, rolling dice, putting it all in red or black, red or black, red or black. Of course, there's always green. Like we don't move, right? It's like the roulette table. That's why I like that analogy. That's why I made it an icon in Discord. You could spin the roulette table up or down, right? Up or down. But there's that occasional where it just totally surprises you and stays where it is. And, 0, double zero. And I guess now they're trying to add 000 because the odds aren't good enough for the casinos. So, bang. That's a nice pop, but it's just sideways. That's not, doesn't make me feel good, but this is a roadmap bounce with a slight uptrend going. That high to low right there, roadmap bounce. This would be a potential conservative entry, getting above this. Looking for 177 on the upside if it's going to go. I might wait. I may be a waiter for another day if I was going to trade this one. Like, you don't have FOMO, all right? There's a waterfall of opportunities every single day. Just because something's out there and you're like, man, that looks super hot. I want a piece of it. You got to pick your spots, all right? They're not all going to be winners. They can't all be winners. And that one looks like it's about to break out. So two levels for lows here. Needs to break out above 230. And we need to get above this prior high right over here. It's like the double resistance zone in here. Double mint gum. So we've got that trend line coming down to the lower highs. Got to break up through that. Got to get through those prior highs. And then we start tipping the odds that we're going to go on up to 287, potentially 319. If it fails there, target's down here, like 150. Cold, that's natural gas. Short. Look at that. Look at that. Down below the box. Who could have predicted that? I don't know. Anybody know anybody that been talking about this for a year? We were going below $2. Anybody? Sometimes I get lucky, I guess. It's funny. Every arrow I have on this chart is down. Anybody think I was kind of expecting it to drop? Let me know in the chat. Craziness. Yeah, I mean, yeah, Fang is up $10, but it's just sideways. What makes you think it's going on up? And we do have earnings coming up right here tomorrow. BMR. I don't know. It did this before. That's a higher move, but look what it did last time. Probably going to do that again. Would be my guess. Palladium keeps going in the toilets. NVDL, that's leveraged NVIDIA. You want to play with fire, there you go. Be careful on playing with leverage, all right? Leverage stuff doesn't always work according to the pattern. So that bounced off the roadmap line and shot. NVIDIA bounced off the roadmap line and shot. I mean, this is crazy levels. Ridiculous. Can it go higher? Sure. This one can go to 1,000 too. Also, just like SMCI. We get to like $1,000 levels. I'm probably going to be putting long-term shorts on everything. Wish. You're going to wish it could get through resistance if you trade this one. That's pretty much a dumpster fire. Oh, it's got all the makings. Like, there's the reverse split. That's pretty much a dumpster fire right there. Dumpster fire. And ARM continues to be ridiculous. 150. Decliner list Monday.com. Man, look at that. Now, supports here. It got like halfway there. Gotta be careful on that one. Could go ripping off higher, but that's not down to a support level where I would be comfortable trying to get into it. Biotech. Ouch. This is why I say biotechs, stay away. They just, humming along there. See, we've been humming along, and then right there. Be careful. Be careful. There's the reason I don't trade biotech, medtech, drug, anything with FDA approval. So ASML continues the march. This 1,000 level. This one's not even that crazy. Like, zoom out and look. This is not even that crazy because we did a beautiful long pullback from right here in September down to the bottom in October 22. We moved up. Very nice. Moved down. Beautiful retrace. Shot up. Right here. The upside targets 1,035, 1,200. Now, it does get crazy if we start going up here to like 2,000 or 3,000, but right now, 10, 1,000, that's wouldn't even surprise me. 1,200 wouldn't even surprise me. That's very classic targets right there off of this pullback. XPO, that's just being crazy. Like, compared to what we just looked at, ASML, this is like, that did that long-term pullback, and now it's being a little crazy. Even though they took over for, bought almost all of Yellow's assets or whatever it was, as they went out of business. Yeah. And Hollow, look at this. Look at, it's like an EKG or something right there. Like, burp, burp, burp. It's like, you want to lose money? You want to lose money? I'll give you opportunities. As it keeps going lower. And it's pretty much a dumpster fire with the reverse split in there. So just don't trade this crap. Don't trade crap. Why do you want to do it? TRMB. Tremble. That one's reported earnings this morning. Looks like a little volatility. It's got significant resistance above us. How many people here have anything with Trimble on it? It's been a bit. We don't even. Oh, like we bought Leica to replace our Trimble. They make measurement instruments and software and geospatial resources, utility. I mean, I'm not saying it's a like bad. I'm just, it's expensive. You don't necessarily get what you pay for. BYD. It's not one of those like the more you pay, the better it is. It's just sideways, choppy garbage. Now, there was a request in Discord for whether Duolingo was a measured bounce. I want to talk about this briefly. We're going to clear the chart and we're going to talk about it. So right here, where's the lowest low? It's actually right there. So really, measured bounces, it kind of depends, all right? That right there, if you looked at it like 1, 2, 3, 4, 5, that being a complete impulsive wave up, which it looks kind of like, the measured bounce level would be right here. The most ideal. And I don't like, you're like, JT, where's the YouTube video for measured bounce? I don't have one. It's a class I teach for like $100. So we have a potential A wave down at this point, like the first move down right here. Now, what do I see as potential on Duolingo as we bounce off the roadmap line? So it could be a roadmap line bounce, could be do an extension higher. As far as measured bounce, we probably don't have that component right there because high to low, look where the 618 comes in. We may find significant resistance right here. So this would be the whole point of a measured bounce is that it's basically an Elliott wave ABC. And jumping down here, where there it is. This would be an A. This would be an ideal B, and then the C wave would be down here. And we may see this rally right up really strong, right to there, stop, and turn down. I'm highly cautious on this one at the moment. And it lines up with the proportions of the fibs right there. 100 to 100, 1272, 127.2. I would be a little bit on my toes on that one at this point. You know, 1, 2, 3, 4, 5. Kind of a blow off in the 5. Needs a retrace a bit deeper. That would bottom right in the neighborhood vicinity of the 4. This fits a lot of the Elliott Wave guidelines. And if you're unfamiliar with Elliott Wave stuff, I don't really teach that very much. I kind of go through it in my VIP group. But it comes down to, do you want to be a market analyst and be able to do Elliott Wave stuff, or do you want to know how to make money? And making money is simplified out the patterns, right? So the argument could be made that, yeah, that's a measured bounce for an extension. If you go off of that low to that high, potential measured bounce, but that's not the ultimate low. There was another low right there beside it. Why would you use this low? Doesn't exactly make sense, because there's another low right there beside it, and then there's another low right there beside it, and then there's another low right there beside it, another low right there beside it, and then all of a sudden, if you move this all over, it's no longer a measured bounce, but it does get close to lining up with the bigger one all the way from this low right there. So, could it work? Could. Is it likely to go popping off the standard measured bounce type of target all the way up here at like 300? Probably not. Not at this point. Now, if it does retrace down to this zone, back down to 125, 130 area, then we have a much bigger potential. And we could be talking 400. Yeah, like 4 times your money on Duolingo. But at this point, I think it's just a roadmap bounce potential. Got to get above the 618. 262, 285 would be my targets on that one. I just wanted to talk about that because it was a kind of a complicated setup. And if you hung around and you learned something here, give me a like. Let me know. And if I said anything that was helpful, beneficial, we do have that significant resistance right there at those prior highs. And that may be resistance, and we go on down right there. So have be careful on that one. Have a plan in mind. Stick to the plan. All right. It's not being wrong that costs you the money. It's staying wrong. Right. If you get long here and you're like, I'm going for the bigger targets, and it starts down at that resistance, don't stay wrong. You're gonna lose all your money. All right, there's the target on the downside. Now, if we are to get up here, we could go up here. I would only go for 260, possibly 280, not for the bigger targets on up there. So, all right. Bias for the day? Maybe we just chop around. There doesn't seem to be a lot happening and crapping. But we could just shoot on up to the extension there, that 5150 target area. And yeah, we could just throw on another 125 points. Wrap this baby up. If we get all the way to that 1272 without any kind of pullback, oh man, that almost gives me a sick to my stomach feeling. So be careful out there. I will be live talking about crypto here in just a few minutes. So have a great day, everybody. I'll see you around. I'll throw the link in Discord. I don't have a Zoom link. So if you're in Discord, I'll throw the link in there. If you're not in Discord, come join Discord. It's like $5. Come on, down below. But if you don't trust me, that's cool. I'll do my best. Just keep coming back. Make sure you're subscribed. And I'll see you later. See you tomorrow. We'll do this again. Same bad time, same bad channel. And tomorrow we have 30 minutes of awesome at 5 p.m. where I take your request for at least 30 minutes.